right, let's try to make sense of all of this now. This morning we've got April Tan. She's the Chief Equity Strategist at Cole Financial, and she joins me now live via Zoom. Hi, April. It's good to talk to you again. It's been a long time.
Yeah, good morning.
You look quite unchanged. You look exactly the same as you did 6 years ago.
Thank
Listen,
you.
so much has happened since then. Let's kick off with the big news of the day, which is the escalating crisis in the Middle East. Uh, Start of the week, there was a lot of bearishness that it could escalate into an all-out war, and then last overnight we saw a little bit of optimism that it could be contained after all. It's hard to predict which way this is going, but how are you guys hedging against this?
Well, that's quite difficult, but I guess for us we're looking at how it will impact the oil prices and of course how it will impact the foreign exchange and interest rates because I think those are more critical for stocks. I mean, if oil prices continue to go up, then that's bad for inflation. And that in turn may discourage the central banks from cutting interest rates.
Yeah.
I mean, the BSP is expected to cut interest rates by 25 basis points. And I think the consensus is prior to all of this, that the BSP will cut rates by another 25 basis points after.
Yeah.
But, given the increase in oil prices, you already have some central banks stating that they may stay on hold due to concerns about how it would impact inflation. And of course, I mean, if you think about economic growth, the surveys already show that Filipinos are not very optimistic because of the rising inflation, or they feel like the high prices. I mean, inflation's going down, but Filipinos are not happy about how prices are not going down, and then you have this happening. So it's really not good.
But that's actually what I also wanted to point out. I understand what you mean by the window for the BSP to cut rates may get smaller if oil prices go up. But at the same time, I feel like because inflation has been on the downtrend for us for most of this year, doesn't that give them any more impetus anyways? Because I don't have the bar chart right now, but the last data showed inflation was just at 1.3%, well within the target.
Yeah, I think the June cut is in the bag, but the question is, what about the other cuts in the future? Because after the June cut, I think the market is anticipating one more cut for the rest of the year. But with this rising oil price situation, they might think twice. I think it's not only because of what's happening in the Philippines, but if you listen to what the Fed has to say, we know that the Fed actually has a very hawkish bias. At this point, it's already implying that, we want to see how tariffs are affecting inflation. And they might not be convinced yet, given the April and May numbers, okay? Because the May inflation is quite low, surprisingly low in the US. But still, they may say that, um, we had the businesses hoarding inventory ahead of the tariffs. So the impact of the tariffs might not yet be quite evident. So they may say something similar to that after the FOMC meeting. So I think all ears will be focused on the Fed. And the Philippines, I mean, no matter what the BSP says, we can observe that the moves of the Fed have an impact on how the BSP decides because of potential impact on the forex. Now we're seeing the peso again weaken at the 56 level, so that might be something that the BSP is monitoring. At this point.
I've heard also other investors and traders say that, the domestic economy is going to or should stay resilient because it's mainly, focused on domestic consumption. So should I take that to mean that there's less tariff anxiety locally, do you think? And what sectors are proving resilient, do you think?
Yeah, I mean, we are more resilient relative to other countries, but that doesn't say that we won't be affected. I mean, there are indications that, growth is not as strong as we would like it to be. Um, well, as far as I would say really resilient, but in the first quarter, we saw, for example, the consumer sector continuing to recover. But that said, the recovery wasn't as strong as we would have wanted it to be. Because yeah, the sales were going up, but they weren't going up really as strong as we would wanted to see. And then these companies encountered higher costs, um, because we know that certain commodity prices have gone up. Like we have coffee going up a lot, coconut oil, and some other, selected commodities. It's not across the board, but some companies encountered higher costs during the first quarter. So consumers are okay, but they're not as robust as we would want them to be.
So it is somehow eating into growth prospects then because of the, I guess, rise in price of raw materials. If I could just pivot a little bit, April, the other big thing that's coming up is of course the impeachment trial, and you don't have to weigh in specifically on the legalities of that, but I wonder if you've heard what the investors and the traders are saying about this, and which way do you think it should go, and how they're sort of hedging against this, I guess.
I mean, in general, I think the political situation in the Philippines is, as far as investors are concerned, they don't really mind it. I think what was telling, the BSP came out with a consumer survey last week, and if you look at that, it seemed like the Filipinos actually don't like it. Um, so for me, it's, I didn't realize that it would have some impact on maybe economic growth in that respect, because it said in the survey that people didn't, I mean, the Filipino consumers didn't like it because they felt that the quality of the government service is deteriorating, or maybe the delivery is being impacted by all this politicking that's happening. So for them, that is how they view it, and in turn, that is negatively affecting their sentiment. And if sentiment is bad, then consumers will spend less, which is, of course, not good for the economy in the stock market.
Oo nga, it becomes a self-fulfilling prophecy, doesn't it? Because once
Yeah, yeah.
sentiment sours, then it's hard to try to convince people otherwise. But in closing, what is there to look forward to? I mean, in the news sometimes we tend to dwell on the negative stories, admittedly. So the big story this week is obviously the Israel-Iran conflict and how that might impact commodity prices. But domestically, in terms of growth, in terms of earnings prospects, in terms of positive catalysts for the stock market, what's there to look forward to apart from the BSP cutting rates this June?
Yeah, well, like we've always said, the valuations are very attractive. And if interest rates go down, then the attractive valuations will, I guess, become more attractive. Or one of the things I think that like I haven't seen since I started working is dividend yields the way they are. So right now you're actually seeing a lot of companies giving good dividend yields. So, if prices go down and, interest rates also go down, then, there's greater incentive to buy stocks because, they're very cheap and they provide good cash dividends. So I think it is going to be a buying opportunity if stocks are sold down, due to concerns about, say, escalating tensions,
Right.
and, lower interest rates.
Yeah. So it is a good time to buy with valuations so low at the moment. We will leave that there for now. Thank you so much for your time and your insights today. April Tan, she's a Chief Equity Strategist at Cole Financial. Thanks so much.